Well, from your perspective, what are some of the biggest problems in traditional finance that you believe tokenization and blockchain have the potential to solve?
Mm. Well, we talked about shorting. We talked about that. But I really think that most investors, and this is where I think T7X is really trying to differentiate itself from, say, a traditional stock market, which is every asset that's going to be listed on T7X. There's going to be full transparency of all the information that you could possibly want about that investment. Everything from its audited financials, its securities registration, um, newsletters, investor information. All of that will be accessible on T7X. And then on top of that, you will be able to elect, I believe you'll be able to elect how you might receive dividends or cash flows, might be in further uh, 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 trusted smart chain tokens. There are a number of different ways of dealing with that. But I think at the end of the day, what we are really trying to achieve is for smaller, and I emphasize the word smaller companies, and by that I'm thinking 100 million and below, to really be able to benefit from a platform where they can get their capital raised, they can get their information out to the marketplace, and investors can know that they have security around investing on that platform.
Well, we're talking about the universal framework, right? This universally accepted framework or globally accepted framework for the tokenization of real world assets. And up to this point, Barry, it's been somewhat of the wild, wild west because there has been misrepresentations, valuation issues. There's been no real framework, and to my knowledge, TSC is the first blockchain in the world that's really raising the bar, so to speak, and requiring every single asset to get through that Reg A process. And even the majority of the projects that are out there now, meme coins, let's just start there, wouldn't even be able to get past the valuation process because they don't have any cash flow. They don't have any assets. They're launching for one specific purpose, and that's to just try and raise as much money as they can.
That's right. That's right. So, I think part of the issue here that you're pointing out is that blockchain and tokenization sort of started hand in hand without any real understanding as to what the possibilities were, other than potentially buying Bitcoin or Ethereum. And then so many other blockchains have been built, but many of them have focused on almost what I would call silly, almost fictitious assets like meme coins. And apologies for those that have made money on those. I think that's brilliant, but it's not necessarily representing a real asset. And what I like about TSC is that you've really focused on, teaming up with T7X in a way to create this very, what I would call, structured and more secure type of environment uh, for any of these companies to raise money.
Yeah.
So any company or any asset that's going to be on the T7X has got to be an SEC registered Reg A or Reg D. Reg A has a number of different, it has two levels. It has a Reg A, I think it's part one is for 20 million, and part two is for things up to 75 million. But at the end of the day, the best part is going to be that we're going to have audits of the financials from, legitimate audit firms. We're going to have access to corporate documents. We're going to have the registrations. The SEC will have at least a connection to this asset, so they will feel a level of comfort. So this goes hand in hand with the whole sort of change in this current from an administration that really tried to almost crush the whole crypto environment to an administration that's embracing it and really wants to push I mean, dare I say, our current president is all about making deals. And what better way of allowing small companies and small, entities in the United States and globally to come to our markets than through a tokenized structure?
Yeah, I guess you could say that crypto's growing up. We're moving from a place of hype and speculation to tangibility and substance. And I've often said on my presentations, what's it going to take to get to mass adoption for that next generation of individuals and even the baby boomers to start moving in the direction of cryptocurrency? I think of my dad who's extremely successful. He's a conservative, and up to this point, he's watched a lot of these meme coins and pump and dumps and rug pulls and the scams, and he's looking going, there's no value here. And so what's really exciting to me is as we move over to fractionalized ownership and tokens that are actually representations of ownership of assets, we're now moving to a place that do I even dare say it's, you go back to the gold standard when it was applied to the dollar back pre 1972, and you actually had real value. We all know what's happened to the dollar since the gold standard's been removed. And so I think that's what I'm most excited.
Absolutely. Well, real assets are real. And the aspect of being able to own a piece of a real asset and do it in a way that is what I would it doesn't necessarily mean that the investment itself will be fruitful, but it means that you have less concern around where is my money going? How is this mechanism actually working? What information can I get? I dare say that so many small investments in this world are very opaque, right? I mean, we've maybe bought a small piece of commercial real estate, and you might do it with a friend, and then all of a sudden you realize, I don't know where that money went. So this is a chance for us to really create an environment that is going to be sound and secure.
Well, I read the other day that crypto's been in the headlines no less than 12,000 times since January 1st. No less than
Hmm.
12,000 times. And so if you think about that and you think about all of these people that are now seeing it acknowledged at the highest levels, that's going to create an entire new community. And even inside of the trusted smart chain community, it is not your traditional quote unquote crypto bros that have been in the industry for the last 10 years. It's
Hmm.
the new it's the next generation of individuals that are wanting to get in on this massive growth. They're still pioneers, they're still early, but it's just a whole new adoption that's taking place, and that's exciting.
Yes.
So,
I think there's going to be quite an aggressive adoption across a number of different exchanges of real world assets, and I know that T7X is going to be one of those exchanges at the forefront. So just we are teeing up right now. This is nothing of proprietary value, but we're teeing up commentary to the SEC about how we are doing things and how T7X is attempting to not only meet the standards of the SEC but exceed them and in essence, be the poster child for how to do things right. And that's actually quite exciting.
well, what would you say separate? I mean, you've seen hundreds of projects come and go in your career. What do you say separates Trusted Smart Chain and T7X from other crypto plays out there?
Hmm. Well, it's very interesting. If you look at CNBC's website this evening, there's a story that I saw about Coinbase. Now, Coinbase has been wildly successful. I give them a lot of credit. But apparently, when they went public, and possibly subsequent to them going public, um, it seems as though they may have misreported the number of actual users. Now, why is that significant? I'm saying it because simply put, we all know that the number of users was what they use to actually help set their stock price. And as they report more and more users, it will influence the stock price, I guess, potentially higher. Well, the SEC is always very sensitive about that, right? Because you can't. I'm not saying that Coinbase is anywhere close to what we saw with like Enron or anything along those lines, but here you have a situation where you have one of the poster childs of the crypto space potentially, doing something wrong as well. So I think the key here is that T7X is going to be, along with the trusted smart chain, is really going to try to set the standard, right? And the T7X, I apologize. Since I'm an advisor, I do not know. I do not believe we have any immediate plans for that to go public. I think it's going to remain a sort of a private entity for the time being. But as if we didn't follow the attributes that we're telling every asset that comes onto T7X is going to follow a certain protocol. Well, T7X is going to follow that same protocol, right? And that's what's going to be, I think, a very it should be one of the standout attributes that we really stand on.
Well, you obviously talk a lot about compliance and structure. How important is it that TSC, and more specifically T7X, the projects that are coming onto the T7X digital platform, how important is it that they file a Reg A or a Reg D and they operate within a fully compliant tokenization framework?
So the filing of a Reg A and a Reg D filing with the SEC does not, in its own right, um, doesn't change the nature of the investment. But what it says is that the company that started let's say the company itself that's doing an equity raise, and they want to do it through a Reg A offering, they still have quite a number of requirements that they have to fulfill with the SEC to make that happen. And 9 times out of 10, we find that companies that are not willing to make those disclosures, to get the financial audits, to be able to disclose um, everything that an investor would want to know. What do your financials look like? How much do you pay your top executives? Who's on your board? All of the things that we would see in a normal, stock offering can be done now for a smaller company. And so to your point, the regulatory environment today, I think, is going to get stronger, but it's going to require companies to be more compliant with these regs. And I think that if we get a chance to really work with the SEC, we will help drive a lot of that regulatory compliance ideas.
Well, you said in your talk in Irvine that a lot of the greatest ideas ultimately do come from companies like T7X. They look to the industry to help raise the bar and ultimately bring the regulatory ideas to the table. So that's an exciting time. And I know that many of our co-founders have been at Mar-a-Lago meeting with Trump's crypto czar and several senators, and so they're actively involved in that process, which is very exciting.
Yeah, those discussions are going to continue. I would guess that the crypto panels that are the roundtables that are being put together at the SEC, they're going to be critical, and we're going to have a seat at that table.
You're obviously privy to or aware of some of the real world asset projects that are coming on to the T7X digital platform. Can you say that these projects are real existing businesses? You're familiar with some of these projects and that they actually do exist?
Oh, I'm familiar with the projects, yes, but the proof will be in the pudding, right? In other words, I see it this way. Each one of those projects will have to go through the process of registering with the SEC. And through that process, we'll have to submit documentation, audited financials, and so on and so forth. And one of the things that we've been doing, I believe that some of these projects, people are physically going and visiting them. So there are hotels in Tulum, Mexico. There are other types of properties that are going to have tokenization done, and I think that's fantastic. I think there's a chance here for there to be real connectivity to your real world asset,
Yeah, I love
right?
that. I love that. Scott Lewis says, can you talk about the protocol for the RWAs? Is there anything else that you would add to the overall protocol for an RWA?
Well, in terms of that, it's a great question. In terms of looking at, let's first talk about sort of the breadth of potential real world assets that can come through this platform. It could be everything from real estate investments to commodities to stock offerings from money earning companies, right? I think about, so one of the things you mentioned at the beginning is that I'm on the board of a biopharma company called General Oncology. It's a private company today. One of the things that we've been looking at is the fact that so many companies on NASDAQ today, so many biopharmas especially, you know, did their stock offering, raised 50 to 100 million. The stock prices started at $10, $15 a share. They had a little bit of bad news, and now it's trading at 20 cents on the dollar. So the point I'm trying to make is this type of platform serves an incredible purpose across a very large spectrum of different types of assets. And because we're not going to allow shorting, well, that implies that markets, as they develop, the companies should trade at values that the market perceives to be quote unquote real, right? One person's value versus another person's value. So you have somebody that wants to sell their interests in a particular company, and they put out a request for a proposal or a bid, and they see what bids come in, and then they choose the biggest bid, the largest, highest bid. The point I'm making is we have an opportunity here to build a platform where the sky is almost the limit on the types of assets that could be listed here. And with the understanding that as long as we're not, in a market where manipulation can occur, I think there's going to be a gravity towards this sort of platform because companies are going to want to list on this platform. If I know if I'm a biopharma and I want to raise money, I go out and I raise the money, and then I want my shares listed on T7X in token form. I know that the market's not going to manipulate my stock price, right? Through shorting and make my life a lot harder for raising money in the future. So there's a lot of different opportunities here. The real world asset is simply an asset class, name that we're using for a very broad spectrum of possibilities.
Well, thank you. I appreciate that perspective. And again, for clarity's sake, those of you that are looking at Trusted Smart Chain, T7X and the platform that we're talking about and the tokenization of real world assets is happening over on the T7X side. The node operators are what make it possible. And Barry, one of the things that was very exciting for me to see is on March 14th, the SEC, you can see this on the sec.gov, provided much needed clarity. And that clarity was proof of work mining is not considered a security. Do you mind just touching on that for a moment? Because for a while there, they didn't know what was or what wasn't a security. It seemed like they changed that definition every few months. So talk to me about that.
let me take it back a bit, because at the very onset of, let's call it in 2015, 2016, while security tokens were just coming online, people were coming out and saying these are not securities because they are tokens. Okay, now we know the old adage, if it quacks like a duck, if it walks like a duck, it is a duck. And that's exactly the case, right? So for the assets that are being listed on T7X, those are securities, and we're treating them as such. In terms of your nodes, now I'm an advisor to T7X, but I will say, I think I think the SEC did exactly the right thing. They did exactly the right thing. This is meant. They are not securities. They are not. They don't have any of the look and feel of a security, and as such, they shouldn't be considered securities. So I think they did the right thing, and you can tell also through that process, through that action, that this administration really wants to accelerate things.
Yeah. Well, I appreciate that. Let's, I want to change gears here because people may not know you as one of the original whistleblowers in the Bernie Madoff scandal. And this is such an incredible story. What led you to take that stand, and how did it shape your view of trust, your view of transparency, and even the due diligence in the financial world? Talk to me a little bit about that.
So you're bringing up a story that I brought up when I met with you and the team out in Irvine, and I had an opportunity to kind of talk about that story. And it's a fun story because many of us on the line know the story about Bernie Madoff. They know that it was the biggest Ponzi scheme in the entire world at the time. But there are a lot of little tidbits here that are very, very interesting. So I had, as part of my career, I was also working for a French institution by the name of AXA, which at the time was the largest life insurance company in the world. And myself and another gentleman, we were in charge of their alternative investments unit. And as part of that, we were allocating money to hedge funds. And we got contacted by a group that was representing. So Bernie Madoff, people think about this and they say he ran the biggest Ponzi scheme hedge fund, but it was a little more complicated than that. But when we actually met with Bernie Madoff, it was in 1990. In 1998, he had already sort of developed this track record of just what we would call almost impossible results. Not 20%, not 30%, but a very constant 10 to 12% return profile. And I recall meeting with Bernie Madoff, and in the meeting, he was explaining the strategy. And the strategy was really quite simple. It was that the fund that we could invest in had a discretionary brokerage account. You remember I already said, when you open a brokerage account, you're in the name of, right? So Bernie Madoff Securities would trade that discretionary brokerage account of the hedge fund itself. Well, in that meeting, I asked one simple question. I said, okay, if the hedge fund has a discretionary brokerage account, where are you trading the options? Because that was a big part of this strategy. The options. They would buy a basket of stocks, and they would sell calls, and they would buy puts, and they would collar that position. And Bernie said to me, well, we trade with every major firm, but we clear everything through the Chicago Board of Options Exchange. And there was the big slip up, because in that meeting, I said, well, that doesn't make any sense, because You need to trade hundreds of thousands of these options. And I know that that pit, I was an old trader in Chicago. My desk wrote most of the rules for that exchange, and I knew that that pit didn't have the volume. So Mr. Meadoff explained to me that I didn't understand how exchanges worked, and I explained to him that I wrote most of the rules for that exchange. So after that meeting, we left, and I have to say that I had sort of, the spider senses were tingling, and you really didn't feel like anything was exactly right. I started doing a little homework, and I called a handful of friends that were now at Goldman Sachs and JP Morgan and Citibank. And I asked if anybody was trading with Bernie Madoff, and they all said, no, no, we heard that he does a lot of trades, but we've not seen any of these. Can you get us access to some of this? Well, long story short, we were contacted by the hedge fund that brought us to meet Bernie Madoff, and they wanted AXA to obviously write a check. And we just said, no, I think at the time we're going to hold off. We've got some more homework to do. Well, we kind of forgot about that. But then a couple of years later, we had our friends from the SEC come in and actually conduct an audit of, as an investment advisor. We had an investment advisor group. They conduct audits, periodic audits, and they asked if they could send a team up from Washington, D.C. And that team was going to ask us about hedge funds. And I think it was like after some like long-term capital blow up, and after a couple of other things that worried the SEC. And so in that meeting, they said, how do you analyze hedge funds? How do you make decisions about allocating money? And are there any hedge funds that we should be concerned with? And in that meeting, we said yes. And we pointed out the Bernie Madoff thing, and we actually went up to the whiteboard and we explained the whole thing, and we explained why we thought there were some problems there. Now, we didn't know anything else except for that one meeting. And in that one meeting, there was obviously a break in the information flow. Now, fast forward to maybe 2003, 2004, many of you, if you've ever followed any of the stuff about Bernie Madoff, they had this gentleman, Harry Markopolos, who was the guy that wrote the 50-page explanation to the SEC as to why Madoff was a farce, was fake. And the problem is that Harry was one of these individuals that wouldn't let go. And almost like he was up in Boston and he was working with the SEC up in Boston, and they got kind of like, if you've ever been at a cocktail party and somebody gets into your personal space, right? And he would not let go. And they just thought he was sort of a nut job. Well, I had an opportunity to meet Harry Markopolos. It was probably 2003, 2004. And he found out that I also thought that Bernie was a fraud. And he sent me a 20-page email. So I had like this manifesto from Harry Markopolos. Long story short was, in 2008, was at the end of 2008, in the middle of the credit crisis, was when Bernie Madoff was arrested by the FBI. And that day, I'm sitting in my office and I'm looking at my Bloomberg screen, and I see at the bottom that Bernie Madoff of Bernie Madoff Securities has been arrested. And I go, it's finally happened. It's finally happened, right? I call, we had some people within our bank. I was working for a bank at the time that needed to know about this, but I called a friend of mine who is one of the producers at CNBC. And I said, hey, this is a big story. And they said, who's Bernie? Who's Bernie Madoff? I'd have never heard of this person. I said, trust me, you need to do some homework here. Well, behind the scenes, I helped CNBC really figure out what that story was all about. They asked me to go on TV, and I said, "No, nah, I'm not interested." But about a month and a half later, we get a call. My wife contacted me from our home and said, "There's a phone message on our phone from a John so and so, lead investigator from the SEC, wants to talk to you about something. What did you do?" So I did get in touch with them, and it turns out that they had deposed Harry Markopolos. They subpoenaed to get all of his email records and all of that information. And when you know that they saw the email that he sent to me, and on top of that, they realized that I had spoken to the SEC. So they were putting all the pieces finally together. And I am part of the SEC write-up that was presented to Congress on Bernie Madoff. But getting to your point about, what do you need to know when you try to figure out whether it's a fraud or not? And it's whether or not you trust the transparency. I think at the end of the day, it's whether or not transparency exists and whether or not you can trust the transparency. And that's why, it goes back to one of the first questions you asked me, which is, why am I excited about T7X? And that is a big part of it. It's using blockchain for all the right purposes. And so let me highlight one last thing about Bernie Madoff. The whole fraud was the fact that he had a team that falsified account records. All of the account records were falsified. Now, imagine if you have on blockchain all of those records. Well, you would have thousands of people that could actually look at the records and say, "Wait a minute, that's not the right stock price for that day," or, "Hey, that doesn't make any sense right there." There would be a mechanism that's immediately in place that would allow for that sort of fraud to be discovered. But I will tell you, when you think about the scale, $60 billion, right, of fraud that was going on in Meadoff, the number of so-called smart people that were involved in that was overwhelming. It was overwhelming. So anyway, it's just a fascinating story. There are so many nuances of that story that I could get into, but I just wanted to give you the highlights.
Well, listen, this has been just a fascinating conversation, full of value. One last question, and it can be a quick one. I know we've gone a little long tonight, but this has just been.
Having fun.
Um, Give me your just opinion of the next 3 to 5 years, tokenization. Tell me, where's real world assets heading, and what kind of role could a project like Trusted Smart Chain and, of course, T7X play in that evolution?
Yes. So real world assets have this is the onset of a very exciting time. I have to say that the ability to move financial assets, or I should say real assets, in a financial form that's tokenized, is very, very exciting. But I do believe that the Trusted Smart Chain is going to actually serve a broader purpose. And that's my, pie in the sky. But I still believe that there are projects out there where blockchain serves a much bigger purpose than just the tokenization of assets. So I can imagine T7X growing very large in scale, right? Because there are so many companies. One of the companies we had in Irvine is a startup where this professor from Stanford University has perfected a way to map brain scans, and is doing it in a way where they can her company can actually alert to early stage dementia, uh, Alzheimer's, all sorts of brain function issues, and they have the intellectual property, and she's looking to make it into a real company, right? What a great opportunity. Early stage company, right? Wants to raise a certain amount of money, puts it on the blockchain. That's a very, very exciting idea, right? So the T7X platform is going to have access to real estate, uh, startup companies, biopharma, tech companies, all sorts of different, very, very compelling and interesting types of assets. But then, as that grows, the trusted smart chain blockchain environment, it will be the de facto, in my opinion, will become one of the de facto platforms for building out other trusted networks. And so, my goal would be to try to figure out how to build the title registry. Imagine a title registry. Do you know that in the United States today, almost every municipality has its own title registry system? And many of the systems are different, and some of them are still manual, right? It's the reason why we have title insurance. And apologies to anybody in this audience that has a title insurance company, because it's a great business. It's a great business because they have a team, they go in, they try to figure out if there's any sort of problems with that title, and then they'll write the insurance on the title. And it's very rare that there's a claim against that title insurance. Well, with blockchain, you could potentially get rid of title insurance, right?
Well, now you're talking a whole different, leading to real estate transactions happening on blockchain and all kinds of fees being. There's a whole different rabbit hole that we could dive down with this conversation.
That's exactly right. But that's the possibility. That's why when you start getting when you start thinking about the applications of the technology beyond the scope of just the tokenization of real world assets, it's huge. There are projects out there about how do you track, food sources, like organic food sources. Tokenization could play a role there. How do you monitor, as we talked about the mortgage market, the insurance market, I mean, how many policies are out there that do not get claimed because they can't find the owners? They don't have the proper documentation. They don't have the proper information. So there are a tremendous number of unique opportunities out there. And I think about the trusted smart chain. I think of it not only for T7X, but beyond that. And that's why I'm very excited about it.
Awesome. Well, listen, what an enlightening conversation. And I think we could probably go on another hour, but we're going to stop it here today. Maybe we can have you back in a few months and come and visit us, or maybe even have you as a guest at one of our next, in the future, open houses or real world asset visits. I know
Absolutely.
enjoyed meeting you in Irvine, and what a pleasure it is. We're very honored on behalf of all of us here at Trusted Smart Chain on T7X. We want to say thank you, Barry, for just bringing so much value to the table. We really do appreciate your expertise.
Well, Travis, thank you very much. It's been a pleasure as usual. And I'm going to say it one last time. I think it's a very unique time in the marketplace, and this is an opportunity to be at the forefront of something that has the potential to be really very, very exciting. So,
Outstanding. Well, on that note, we appreciate you. Thank you very much, and we'll invite you back. Definitely, you're getting a lot of thank yous in the chat here for tonight's conversation. So, Barry, we appreciate you. Thank you, everybody that joined us tonight. We appreciate you as well. We'll make sure that this recording is made available And with that, let's go out and dream big and work hard and go change some lives. You guys take care. Thanks so much for watching this evening.
Have a great
Take care.
evening, everyone.
Bye.
Thank you.